All right, let's get stuck into it as far as stock of the day is concerned. Today we're looking at BHP. Now, a unification deal to consolidate the miners' securities on the ASX, that's coming up next week, in fact. And then, of course, the merger with its oil and gas portfolio with Woodside, that gives us pause for thought. In fact, Shemavaz sending the following question. I'm a shareholder in both BHP and Woodside. Can you please clarify what happens to the BHP share price after the sale of their oil and gas portfolio to Woodside? What's the outlook for Woodside as a result also? And should I sell my BHP shares before the sale of its oil and gas portfolio? BHP shares currently up close to 4% in today's trade. Luke, a couple of questions to sink your teeth into there.
Yeah, there's a lot going on with BHP. The unification's interesting, bringing the London listing and unifying. They'll still have on the London Exchange, but there'll be a single legal entity, I suppose. But it'll have some ramifications for the Aussie index. Their weighting in the index will go from about 6% to 10%. It's not small, and it'll be probably the largest business on the ASX. It'll overtake CBA and CSL. And it'll greatly shift the weightings of sectors. As we know, a lot of ETFs and even some more active managers sort of benchmark themselves to sectors. So mining will then overtake financials as the largest sector on the ASX as well. So that's probably just more of interest. I wouldn't look to trade around that or do too much around it. These things, despite some headlines about it happening on one day, algorithms and people have been sort of planning for this for quite a while. I don't think you'll see too much of a shake-up on the market on the actual day it happens.
Yeah.
The merger, and to answer the viewer's question, look, it's an interesting one, merging the oil assets with Woodside. Having a look this morning, it looks like a decent deal. Woodside's effectively issuing shares to acquire BHP's assets. And if you have a look at the size of those two businesses, BHP's oil business is slightly bigger, but Woodside will be, 52 to 48 of the merged entity. So it looks like a good deal for Woodside. BHP obviously spinning off these assets almost as orphan assets, I guess. They don't really want to go ahead with oil and gas in this new green economy. So from a Woodside point of view, from a Woodside holder, I don't mind it. I think it's interesting. To answer the question about how it impacts the BHP share price, BHP will receive shares in Woodside, which they've already said they will distribute to shareholders, the instant they come through. So I had a quick look today. Their oil and gas assets were about 5 to 6% of earnings. So you may see the share price come off, a bit like a special dividend. You'll see the share price come off to maybe that sort of amount, but you'll see some additional Woodside shares in your portfolfolio when they settle. So owning Woodside longer term becomes, your view on oil. There's differing views on that. But looking through the Woodside presentation, they had some interesting things to say about how they're positioning themselves for the future. So I don't have a problem holding both of these stocks, and I wouldn't sell BHP just to hold Woodside, because you're not holding BHP for its oil assets. It's such a small part of the business.
All right, so take that as a hold, Mark. Then, what are your thoughts on both companies, but more specifically BHP?
Look, I'm in complete agreement with Luke there. Overall, actually, we were buying a little bit of Woodside yesterday. Just overall, those energy assets do quite well in the inflationary environment, etc. So, and that sort of switch, that switch out of growth into value. Inflationary environments, they historically go okay on a sort of, I guess you could call it a seasonal basis. But I'm happy to hold both overall. As Luke said, it's only about 6% assets there for the oil and gas. And look, I think BHP overall, I'm still very much a hold. If anything, I'd be buying any sort of dips. Realistically, we've been doing a fair bit of switching out of Fortescue into BHP last sort of week or so. That Fortescue valuation is getting a little bit stretched at the moment. So and Rio's sort of lagging on those as well in terms of the big miners. I think out of those November lows, BHP and Rio are up half of what Fortescue's up. So yeah, look, I'm still pretty happy with it overall.
Okay.
I can see it. It's pretty close to broker consensus around $46 or so $47. But to be honest, I could possibly see it, back above 50 at some stage this year. I think there's been a fairly dramatic rise in the amount of shorts in the Australian BHP that just happened to rise quite significantly around when that large opportunity was available between the offshore, the listings and the Australian listings because of the franking discounts, etc., from being foreign holdings. So there, that may unwind and cause a little bit of a bid tone potentially. I think the shorts in BHP are up around the 8% mark. They're traditionally around about the 4% mark. So there could be a little bit of buying back that needs to be done there potentially. Yeah, look, I'm definitely a hold on BHP and I'll be adding dips.
All right, great. So in fact, it is already in the portfolio. So BHP stays in the portfolio.